Well, this is not surprising as well. It's the Japanese yen. The Japanese yen has dropped, or gold has gone up 41.79%. The price of silver has gone up 35.38%. These are massive moves. This is the reset, guys. It's happening in real time. Wednesday, January 1st, 2025, Maneko 64, home of alternative economics and contrarian views. Well, today all the markets are shut, and we can look at the numbers for 2024, and specifically what I mean by the numbers here are the performances of gold and silver, not just versus the US dollar, but against all the other major currencies that I've picked up here today. And what it's telling me is nothing new. And what is it? Well, it's that all fiat currencies, all fiat paper money are going to zero. They're all sinking. This here is a book by Ralph T. Foster, Fiat Paper Money, The History and Evolution of Our Currency. And he's got in the inside jackets here, on this, all the list of the fiat currencies that have disappeared, right? The fiat paper money. He's got another one here. So it's not like something that doesn't happen. Fiat currencies or fiat paper money, they always go to zero. And the worrying thing about our current really non-system, because we don't really have a system where the international monetary system is actually backed by real money, i.e. by gold or silver, a bimetallic system. We don't have that. We have what John Exter termed back in 1972, after Richard Nixon temporarily suspended the convertibility of the American currency into gold. He called it "I owe you nothing's dollar," and of course, the dollar has been the base of the world currency system since Bretton Woods in 1944. And up until 1971, it was a relatively sound system. Why do I say relatively? Well, because it wasn't a pure gold standard like we had prior to 1914, and in the US prior to 1933. The US abandoned the gold standard domestically in 1933. So how did I learn all this? Because they don't teach you this at mainstream universities. And well, I learned this because I took an interest in gold and silver after I started stacking a little bit in 2002 as a diversifier away from the general stock market. And it took me down this rabbit hole to find out about currency and money, gold and silver, and how important they are. And one of the triggers for me that told me that the central bankers and the governments were going to continue to inflate the money supply, or the currency supply, really, if you want to be technically correct, was a paper or a talk by Ben Bernanke back in November 2002, where he said that the US government had a technology that was costless, that they could make sure we didn't get deflation by just printing the currency out of thin air, and that we would never have the problems of the Great Depression. And to me, that was a huge red flag and a warning to get out of Dodge. And what do I mean by getting out of Dodge? Well, getting out of fiat currencies and trying to put your savings into gold and silver, physical, that is, of course. Some of you might be asking, well, you can always put it in the stock market. Well, that's true, but the stock market really is for those who have the time to study companies whose business is analyzing companies and putting money to invest. I think for the general public, yeah, being able to save in gold and silver is a great way to protect your hard-earned savings, really, or wealth. And why is that? Well, because it's very private. It doesn't have any counterparty risk. And that's why the counterparty risk, I think, is the most important one. So I started following gold and silver very closely, mainly because I worked in the financial markets. And back in '02, I was a futures and options broker. Not trading gold and silver futures, but government bond futures. I had institutional clients. By that I mean professionals that worked in banks, funds, treasuries, even other brokerages. So I spoke to those clients. I advised them what I thought. Of course, they had their opinions. And it's one of the reasons why I started this channel back in late 2015, was to try to bring to the general public my views on money, gold, silver, but also explain to them how the whole system works and how fragile it is. Well, I left the city of London in 2012, so quite a while ago. But while I was there, I had a blog called forsoundmoney.com. And I started writing a little bit about currencies. And in December 2006, I wrote an article, Currencies, They're All Sinking, Part 1. Unfortunately, I haven't found the Part 1. Part 2, you can find it still. It's in marketoracle.co.uk. I'm going to put a link to it below in the description. Some of you might be able to find the first one for me, but be as it may, it's not that significant. But this is what I wrote here on April 24th, 2007, almost 18 years ago. And keep in mind that I had my mindset already that all this was going to happen because of the Bernanke speech, and also because some of the books that I read, like this one, and also like Fiat Money, Inflation in France. I highly recommend that one too, by Andrew Dixon White. So this is what I said in '07. Last December we wrote in They Are All Sinking about how our present monetary system is a dollar-based system and how it has evolved. We also noted how all major so-called hard currencies, along with the dollar, had been losing value against gold since 2001. In part 2, we will be giving an update on how the major fiat currencies are faring against gold at the present time. And I go on to say that I recommend that you read part 1. But what I can say is that I go back to Bretton Woods and talk about how the dollar became the major reserve currency. If you want to find out more about that, I have a Bretton Woods playlist. You can go through that. But be as it may, the dollar is still the major reserve currency of the world. And even though we're seeing a big de-dollarization and a big move away from the dollar by the BRICS, the dollar is still at the base of every other country's currency. And what does that mean? Well, it means that these countries hold treasuries or dollars to, yeah, as a reserve. It is the base of their own currencies. Of course, they're acquiring a lot of gold since 2022, and I think that's going to change completely. Yes, going forward, the dollar is going to be still going to be a major currency, but the major reserve asset is going to be gold. I have no doubt about that, because fiat currencies always go to zero, and they might be able to keep the dollar and its little mini dollars or other fiat currencies going for a while longer. But my my prognostication is that they'll have to come up with something new, because these fiat currencies, of course, always go to zero. So I think the big theme for 2024, and you won't hear about this in the FT, you won't hear about this on Bloomberg or Wall Street Journal, is that the currencies have had a horrific year. And what I mean by that is that they've been trounced. They've accelerated their sinking versus gold and silver also, even though silver has underperformed. So what does that mean? Does that mean it's an aberration, and that the currencies will rebound versus gold and silver? I personally think it isn't, and it's going to continue, and it could get worse. And what do I mean by it could get worse? Well, I think these major currencies could sink even more going forward. I'm not making forecasts for 2025. What I'm making forecasts for is the next 5-10 years, if they're still around, of course. And I've got the track record to prove that this has been working, and that I've been warning about it. For example, in the article from '07, just to give you an idea where these currencies were vis-a-vis gold. For example, let's have a look here. The Swiss, well, the dollar price was at 684. The pound price was at 342. Swiss franc price was at 823, and the yen price was at 81,000. That's the gold price in those currencies. So just keep that in mind. Yeah, for example, what we're hearing about from the mainstream, of course, is about stocks. Financial Times says U.S. stocks soar more than 20% for a second year in a row. Nothing about the currencies. And why are the currencies so important? Well, because it's the common denominator in your country of the value of everything getting wrecked versus gold and silver. It means that everything is going down the drain. And it was Jim Sinclair who said that a country's national currency is similar to the common stock of a company. So if your currency is going down versus gold, it means that your country is going down the drain. And why do I use gold? Well, there's a couple of reasons why. One is that when asked what gold was, J.P. Morgan replied in Congress, I think in 1913, that gold was money, simply money, and that everything else was credit. And I still think that hasn't changed. And that's why central banks always hold gold as reserves. While there are a few exceptions, like the Bank of Canada, the other reason why gold is such an important monetary asset, and it's also money, is that it's maintained its value and purchasing power over thousands of years. And that's why sovereign nations always go back to gold and silver to some extent after a major collapse of their fiat currencies. And here we have the whole world in a fiat currency system. So what I'm going to do now is go over a report card of the major currencies, and I've done 10 of them. The currency of your country might not be there, but this is what I'm going to go through. And I'm going to go from the worst performing currencies to the best performing currencies versus gold and silver. And you'll be surprised how much these currencies have sunk. I was kind of surprised. I knew what roughly the dollar price of gold had done. But anyway, let's start. Well, the worst performing of these 10 currencies is the New Zealand dollar, the Kiwi dollar. Gold was up 43.69% in 2024. Yes. Silver was up 37.2%. I don't really follow what's going on in New Zealand that much, but I'm not surprised though that the Kiwi dollar hasn't done as well. Number 9, well, this is not surprising as well. It's the Japanese yen. The Japanese yen has dropped, or gold has gone up 41.79%. The price of silver is going up 35.38%. These are massive moves. This is the reset, guys. It's happening in real time. Yes, and it's been happening for over 20 years, I would say. And we're going to come to that in a minute. While the number 8 is the Aussie dollar. The price of gold was up 40% in 2024. Price of silver up 33.65%. Number 7, the Canadian dollar. Gold was up 38.07%. The price of silver was up 31.84%. And it's interesting that, yes, the FT is noting how stocks soared more than 20%. Well, all you needed to do is hold gold and silver, and you'd be doing a lot better than that in these bottom 4 countries that I've told you about. While number 6 is probably a bit surprising, but to me it isn't, because they started cutting rates. The Swiss National Bank was the first bank that cut rates early last year, and it was a big surprise. And they've cut even more aggressively recently. They halved their rates from 1% to 50 basis points. That's the short-term rate. So the price of gold is up, was up 37.19% in 2024. Silver up 31. Number 5, euro. Euro is up 35.6%. The gold price, and silver 29.45. Number 4, Singapore dollar. Why the Singapore dollar? Well, it's a pretty relatively strong fiat currency, and that's why I picked it. Well, even against the Singapore dollar, gold managed to go up 31.62%, and silver 26%. So now we come to the top 3 best performing fiat currencies versus real money, i.e. gold and silver. Well, at number 3 comes the Chinese yuan. The price of gold was up 30.85%. Price of silver 25%. So what I'm trying to say here is that these currencies are dropping because they're buying a lot less gold and silver, right? I'm not trying to tell you how well gold has done, but how badly these fiat currencies have done. Number 2, and it's a surprising one because there's a lot of talk, and I've even been talking about this, that the UK economy is in really bad shape. But yeah, the pound is the second best performing of the major fiat currencies. Why do I think that is? Well, maybe because the Bank of England hasn't cut as aggressively as some of the other central banks here. But I think that's going to change. I'm not sure the pound is going to stay near the top for much longer. But be as it may, price of gold went up 29.42%, 2024. And the price of silver, 23.54. So the top dog, you probably have worked it out, is the US dollar. Yes, the dollar has had a good year relative to all the other fiat currencies that eventually will go to zero, and the dollar will go to zero too. And what does that mean? Well, it means that at one day in the future, you won't be able to exchange these fiat currencies for real things, especially not for gold and silver. No one will want those currencies. Is that going to happen in 2025? I don't know, but it will happen. It will happen because it's all about maths and the amount of debt that the whole world is in. So gold went up 27.2% versus the dollar in 2024. Very good performance. And silver at 21.48. So, of course, some people are going to ask, don't you think gold and silver are not going to do as well in 2025 because they've done so well compared to, for example, how they've done historically? And yeah, I want to go through that. And I actually use Grok from Twitter. And let's first go through the silver price. It says here from 2000 to 2024, silver has increased from around $5.40 an ounce at the beginning of 2000 to about $29.60 per ounce as of late 2024. So yesterday we closed around $28.90, but this should do. It says representing an approximate five-fold increase over this period. This translates to an average annual gain when considering the compound annual growth rate of roughly 5.5% per year. So that's how well silver has been doing every year since the beginning of the century. So yes, the performance this year has been very good, but you hear nothing about it, about gold and silver. If anything, it's only the gold bug, sound money community, the stackers, that are interested. The rest of the investment public, the rest of the public itself, all they want to know about is the NASDAQ and the cryptocurrencies and Bitcoin. So, excuse me, what about gold? Well, the average annual gain for the gold price from 2000 to 2024 is approximately 9.2%. That's in US dollars. It's a little more for the other currencies, I would say. For some, it's a little less, but it's roughly 9 to 10%. So yes, we've had a very good year. And the key question here is it going to continue? Are we going to see a correction down in gold and silver? And what does that mean, a correction? Well, it means that the fiat currencies will regain purchasing power. And in my opinion, they could, maybe in the next few months, regain purchasing power. They have since the result of the election in November in the US. But I think the way to look at it is whether you think the central bankers and politicians are going to stop inflating the system, and whether they're going to bring the whole system down, or if they want to have a Great Depression to rein in or extinguish a lot of the debt. The debt is money, of course. The flip side of fiat currency is debt. If you think they're going to do that, if you think they're going to aggressively raise rates, if you think they're going to aggressively cut the size of government, if you think they're going to engineer world peace, then yes, gold and silver might not do as well as they did last year. But if they were to do what I just said, the whole house of cards would implode. Counterparty risk would come to the fore because you'd see a lot of individuals, institutions, and governments basically go bankrupt. And that's why I think they're going to continue to inflate until they can't anymore, until the currencies collapse through hyperinflation. And that's why I brought this quote from one of Ernest Hemingway's novel, The Sun Also Rises. And one of the characters in the story said, "How do you go get bankrupt?" And the answer was gradually, then suddenly. So this is what I think the performance of the currencies in 2024 is pointing to. Yes, it's been a gradual sinking. It's accelerated now in 2024, and in 2024, and it's going to continue in 2025 and beyond. And that's why I'm holding on, and I'm trying to have as little fiat currency as possible. Of course, we do need fiat currency reserves, or what people call cash reserves, to function in the day-to-day economy. But if you have a lot of spare fiat currency reserves, I think it's a big mistake to keep it. With that, I'm going to wish you all a very happy, healthy, and prosperous 2025. Take care. Bye.